Time now for the market report with our own Market Merlin, Zach Ashmore.
Thanks, Mike. Market's still a bit volatile. Row crops up for the most part, while cattle down just a touch. More on that in a moment. Let's take a look. Last week's biggest gain, soybeans, still rallying, down 1 week, back up again the next, gaining about 58 cents. Last week's biggest loss, cotton, down by less than a cent, followed by cattle, also down less than a penny. Beans, the biggest rally we've seen so far this year, a carryover from 2020. Supplies getting lower while demand remains the same, classic market forces at play. However, according to market analyst Sue Martin, stocks aren't so bad to ration beans. On top of that, China's buying slowed down in anticipation of Brazilian harvest. Here's Sue.
We have not been rationing beans. The only reason China has slowed a little bit is they're on anticipation. If you notice, this week's sales were all new crop, but they're on anticipation that they're going to be getting beans out of Brazil. But first off, Paranol, which has been dealing with some rains, heavy rains, is about 0.4% harvested. Mato Grosso, a little bit more, maybe around 4-5%. I'm going to say 5.5%, which is well behind normal on both of those. But here's the deal. There's analysts out there trying to portray that the crop is in trouble, that it's, being demised with disease and you name it. According to Fernando with Ag Rural, that's not the case. The crop doesn't look that bad. What my take is that if we go through February and the forecast for February and March, according to a couple of weather services we use, portends or forecasts more moisture as we move through February. So in other words, you'd almost call it, in a way, for developing crops, good conditions. However, if we stay really wet, then you could see some of these beans don't like wet feed. You could see some disease, but what you could see more of is the swelling of the pods and losing beans that way.
Moving on to cattle, numbers up then down, much like row crops, because grains affect cattle prices. I spoke with MSU Ag economist Josh Maples. He says much the same and gives some insight on what's to come. So Josh, what are the current status of the cattle markets and how do things look right now?
Thanks, Zach. Yeah, it's been a pretty interesting couple of months. We've kind of got through a lot of the big issues that we faced in 2020. We've come out on the other side of a lot of those and not dealing with the processing concerns as much anymore. We worked through the bigger the backlog of cattle that we saw in feedlots through the summer months. But then, we came out on the other end, and now we're facing a different setting on some of our input costs. So we're looking at higher grain prices that have impacted cattle prices. We're looking at some anticipation going through the year about what feed costs are going to do. So, actually what's going on with cattle prices right now, we've seen a little bit of up and down in futures markets. We've seen a couple of drops followed by some rallies. So we got a little bit of volatility going on. I think it's a pretty interesting time. We've got some big information that's coming out pretty soon in terms of the inventory report, and that's going to set the supply expectations moving forward through the year. So, we're waiting to see what the supply setup looks like. I think we're going to see a pretty favorable supply setting. And it's really a lot of what happens over the next few months is going to depend on what's going on with feed cost and some of the other things impacting our markets.
I'm glad you pointed that out, Josh, because my next question is, of course, how are things looking going forward?
Going forward, I think we've got a couple of different sides to it, Zach. So, for one, on the cattle supply side, I think we're probably going to see another year of some lower beef cow numbers. And I'm talking about 2020. I expect it to show a slight decline in the cow herd. This will be the second year in a row. And if you recall, Zach, that follows many years of expansion. We had about 5 or 6 years of expansion phase. So we're going to be looking at some smaller supplies of feeder cattle. That's a supportive thing for prices, more than likely. On the other side, you look at what beef demand has been very strong throughout 2020, despite the disruptions. So fairly positive things on the beef demand front. We still have some significant challenges in terms of where beef flows through. We still have big challenges with food service. There are concerns, but overall beef demand has been relatively strong. the concerns right now are really on the input side. Producing beef, the two biggest inputs into producing beef are cattle and feed. And right now we're facing a setting where feed prices, or the commodities that go into feed, are rallying. So we're looking at a sharply different feed price environment than we had just a year ago.
Just a quick follow-up. The report Josh mentions in the interview dropped right after we spoke, and his predictions were correct. According to the USDA, cattle and calf inventory down, totaling 93.6 million head. January last year, it totaled 93.8 million head. So, not a huge loss. And that's it for a deeper look into the markets.